Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, yesterday the Australian dollar tumbled after a choppy session and from an intraday high of 64.52 posted an early low this morning of 63.78 before rebounding. Yesterday, the Australian Bureau of Statistics published the March retail sales, which exceeded the estimate of 8.2 and came in at 8.5. Meanwhile, the market still remains a little bit jittery after the US and China trade tensions have offset initial bullish interest for the Australian dollar. After President Trump said on Wednesday he would be able to report in about 2 weeks whether China is filling its obligations under a Phase 1 trade deal the countries signed back in January before the coronavirus spread globally. Under the trade deal, China agreed to increase its purchases of US goods from 2017 baseline by 200 billion over 2 years, with about 77 billion increase purchases, that is, for the first year, and around 123 billion in the second year. Looking at the technical aspect, I still hold the view to the downside and expect to see a challenge of 63.40, and then once that's been broken, reveals the target of 62 cents, which is still the call since the break of this uptrend. Any advances should find resistance around 64.55, which was yesterday's cap, and therefore could see any attempt up there or towards 64.7080 to fail. The euro plummeted further overnight to a fresh low of 107.81 and still now just only a handful of points away from the target of 107.35 to 55. With the greenback rallying further overnight and posting a fresh 3-week high of 100.26, has now given further risk to the downside from a technical point as we go into some heavy numbers, and therefore we could see a risk of claiming 107.35 or down to 106.35. In overnight data, more than 20 million US jobs vanished in April following a report from payroll company ADP, which showed the tragic depth and scale of job losses last month. The private industry report comes just 2 days ahead of the official monthly job figures, meaning that the non-farm payrolls could actually come in around a whopping 21 million loss of jobs. This would see the unemployment rate jump from 4.4% in March to a high of 16% back for April. Let's see how the market plays into tonight with the unemployment claims and see if the market does potentially show a little bit more weaker bias and show a bit further strength in the US dollar. With the euro tumbling, so as well dollar yen. With yen strengthening, I do expect to see this target of 105 figure 40 to be reached. And with the trend re-established here from the ADX, keeps my call on target. If you're trading the pound, the break of 124 has now given us initial move to 121.6080 as a target. It is in light of the pattern here that we are breaking down quite heavily, and I'm just keeping an eye on this ADX. Once that strengthens up, then that should reinforce the move to 121.6080 as I mentioned. Little to report when it comes to the dollar CAD. It still remains capped from the resistance of 142 figure 35. Although we are seeing a slight trek up, I do anticipate the bears will be ready to stage an ambush from this topside region and look back towards the lower side around 138 as 50-60, that is, as a target. The bears were a little bit hungry for when it comes to the gold. The market plummeted overnight and still shows further potential to the downside. With the dollar strengthening, does give height that we could see a move to the recent lows around 70, or maybe taking it down to the exposed region of 1,640. With the bearish outside range day intact, and until we get a break above 1,715, I still look to the downside. Finishing up with the oil outlook, well, it looks like the bulls have taken a bit of a breather here after reaching the objective of $26 and this bullish trek for 6 days. now expects to see a possible pullback to 22.40.80 and reassess from there. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. I hope you enjoy the great start to this new day.